Hi, welcome to this video, which is all about Forex trading mistakes, and a key mistake that's common amongst losing traders, which is hesitation and the inability to act decisively. Just to give you a couple of examples, a trader knows that he's got a losing trade on. It's probably going to run on and give him a bigger loss. He knows that, but he cannot take the loss. Okay, another example would be a trader sees a big move, let's say up in a currency pair or down. He knows that a big trend is probably going to follow, but he cannot pull the trigger and get in on the trade. He'll hesitate. And they're just two examples. There's many, many more. It's very easy to say, be decisive, don't hesitate when you trade. But the problem is your psychology will come into play, and there'll be two biases within you that will make you hesitate. They are confirmation bias and anchoring. Okay, now in relation to these biases and acting decisively, I just want to go through the biases, how they work within you and how to overcome them. Okay, now in terms of, just very quickly, I'm going to basically show a short intro video clip. It's about 45 seconds long. You might think it's a bit of a strange clip to put in a Forex video. It is actually quite amusing. However, there is a serious message behind the video clip, which I will explain when we go through the biases in more detail. So here it is. We'll be back in about 45 seconds to discuss in more detail.
Now, everything you heard is why I, the actual owner of the Alaska Cannabis Club, will be dedicating all of my energy toward fighting for freedom and fairness, which begins with legalizing marijuana here in Alaska. And as for this job, well, not that I have a choice, but fuck it, I quit.
All right, we apologize for that. We'll be right back.
All right, welcome back after that short video clip. It went viral on YouTube. You might have seen it before. What was the point in showing that video clip? Well, you had the lady at the start who's the reporter, and she's been reporting on the Alaska Cannabis Club when she actually owned it. Okay, so she knew she had to go. But of course, when she walks off, the second lady is kind of frozen. She doesn't know what to do. She's been hit by the unexpected. Okay, now in terms of Forex trading, why is that important? Well, I put the good news about Forex and the expected is you always expect the unexpected. Okay, anything can happen, so you've got to be prepared. You cannot freeze and not know what to do. Now in terms of traders freezing, they do. And the real problem for beginners in particular is opinions. Okay, if you just take opinions generally on anything, it doesn't have to be on the Forex markets. They're harder to change than to keep. Okay, once you've got an opinion, you do not want to change it. Ego comes into play. It's a psychologically proven fact. Okay, and that certainly applies in the Forex markets. And two biases will come in to play in terms of making you keep an opinion. Okay, they are going to be the bias of anchoring in terms of price, and also confirmation bias, which is to keeping your opinion. Now, in terms of trading losses and letting them run, beginners do this. A majority, they say they're not going to do it. They do it. Why does it happen? Well, basically, you anchor to the price you came in at. So if you've got a small loss, then it's not too far away from the entry. I'll let it run a bit longer. Then it gets bigger, and you keep anchoring to the price that you came in at and want to get back to it. You hear many traders say, when I get back to break even, I'll get out the trade. Well, they're not very confident about the trade. If they only want to get back to break even, they should. They're confident in the trade, want it to go to profit. It's just hope. They're hanging on, okay? And as they're losing, they will basically seek confirmation that the market will turn around at some point. They want to keep their opinions. They'll find anything they can to confirm their opinion. They will not look for evidence against their opinion. Okay, so the loss runs, and normally with inevitable results. Now, in terms of big moves, why traders can't take them, again, it's anchoring. Traders will look at the chart, they'll see the lower price where, let's say, a big candle has spiked up from, and they'll want the better price. The odds of continuation are probably high. Big moves just carry on a lot of the time. But the trader will just sit there and think, well, actually, the price has moved too far. Only his opinion, because he's anchored the price to a lower price, doesn't mean it can't run on at all. And he'll confirm that prices have run too far, it's too dangerous to get in, there's bound to be a pullback, etc., and totally miss the move. And missing big moves is a real problem for beginners in particular. They don't like getting in to moves that are in motion, trends that are moving strongly. The odds of continuation may be high, but the trader cannot pull the trigger. Okay. Other impacts of the biases, why traders can't hold trends and snatch profits early. This is anchoring as well, actually. It's not quite a freeze, but trader gets into a move, okay, goes a little bit in his favor, got a bit of profit. He's already looking at the price that he came in at, looking at the profit, and then a little bit of a retracement comes, and he does not want to see the profit disappear, or even worse, the profit turn into a loss, so the trade is snatched early. And very often, traders will confirm that their opinion was correct in doing this by saying, well, at least I got a profit. Well, yes, the trader did get a profit, but it was a small profit. It could have become a bigger profit, and you can't win in Forex trading by snatching profits early, because you're never, ever going to pay for your losses. Trader complacency and profits. There's another problem as well. A trader is anchoring to his entry price and just counting how much money he's making. And basically, the profits are big, everything is looking good, so he'll confirm that the move is going to continue. Okay, not to see any evidence that the move might end. Okay, it's only focused on confirming the view that makes the trader happy. And you'll often find that markets turn around when everything looks perfect. It just happens. So you've got to be very alert. You should be confirming your opinion. You should always be basically questioning your opinion. Is it still correct? Okay, not it is right. And this goes in trading generally, obviously. And when you anchor to the price you're in at, and you've got a cushion of profit, you are less likely to see a potential turn coming. Like I said, those 2 points I've just discussed under number 3, and they're not quite freezes, but anchoring and confirmation bias still make the trader do what they should not do. In Forex trading, you expect the unexpected. Okay, you hear all traders say, "Oh, the market can't do that." The market can do anything that it likes. You have to respond to it. And the best way to respond to the market or deal with the market is to work out in advance what you're going to do. Okay, so when you enter a trade, you've got your stop already in, you know where you're wrong. Don't use a mental stop, because mental stops don't work. You'll let a mental stop, you'll push it back or whatever. So it needs to be a hard stop in the market. You also need to have profit targets as well. And update your opinion each day without biases coming into play. You're best off always, in my view, to approach the markets in thinking what can go wrong rather than what can go right, and how am I going to deal with what can go wrong. Okay, if everything is going right, that's great, but things change. Okay, So you've got to be aware of the biases that are working within you. Now, in terms of traders, they will always want to do the comfortable thing. And the comfortable thing for most traders is to let the loss run rather than take it, okay? Sit on the sidelines when a big move comes. It's uncomfortable taking a big spike to the upside and, let's say, buying it. And also it comes into play with traders who snatch profits early. It's comfortable to do it. It's not the right thing to do. Same with trader complacency, isn't it? It's comfortable, just sit there and bask in your glory without thinking of what could go wrong. So always work out what you're going to do in advance, and always expect the unexpected in Forex markets and be prepared. Right, that is the video for today. Thank you very much for watching me as usual. Take care. Have a good day.